All right, let's get right into it. Today, we are pulling back the curtain on something that promises the world, but, you know, usually delivers a world of hurt. We're talking about that incredibly powerful, super seductive, and honestly, often dangerous idea of getting rich quick.
I mean, come on, who hasn't? The idea that there's some kind of financial shortcut, a secret formula that lets you skip all the hard work. That's a dream that's sold to us every single day, especially online. It's everywhere.
But before we get totally lost in that fantasy, I want you to just look at this number. For real, just let it sink in for a second. 99.6%.
What is that? Well, that's the percentage of people who actually lose money in multi-level marketing companies, or MLMs. And guess what? The odds for day traders are pretty much just as grim. Now, this isn't about bad luck. This is by design. So today, we're going to break down the math, the psychology, and the real cost behind these schemes.
Okay, so let's start with the cold, hard numbers. See, the reason so many people fail in these things isn't because they didn't try hard enough. It's because the games themselves are structurally, mathematically rigged for them to lose from the very beginning. Day trading is a perfect example of this. It's what's called a negative sum game. Now think about it. In long-term investing, a growing economy can create new value for everybody. The pie gets bigger. But in day trading, you're just shuffling the same money around. For you to win a dollar, someone else has to lose a dollar. But it's actually worse than that because the platform, the house, is taking a tiny slice from every single trade in fees. So the total pool of money for all the traders is constantly shrinking. And you can really see the problem right here on this chart. A day trader, their chance of success is about 47%. That's literally worse than a coin flip. But look at the long-term investor, someone holding for over a year. Their success rate jumps all the way up to 73%. The takeaway here is pretty clear, right? Short-term trading is basically gambling on noise. Long-term investing is about benefiting from actual business growth.
And MLMs? Well, this is where the math just becomes impossible. The whole model is built on exponential recruitment. So let's say you recruit 5 people, and they each go out and recruit 5 more. The numbers just explode. By the time you get down to just level 13, you would need more new recruits than there are people on the entire planet. The system is literally designed to collapse, and the only people who see any real money are the ones at the absolute top.
In fact, if you look at the data from the Federal Trade Commission, it shows that the vast majority of people in MLMs make less than $84 a month. And get this, that's before you even factor in what they're spending on products, on training, on going to events. For almost everyone, it's a guaranteed way to lose money. So, okay, if the math is so clearly stacked against us, why do millions of people sign up for this stuff every year? Well, that brings us right to the psychology of it all. This isn't about how smart you are. It's about exploiting our most basic, most human vulnerabilities. I mean, just read this quote from the source material. It's absolutely chilling. You have people who continue to trade, losing money for up to a decade, completely ignoring all the evidence that it is not working. That's not rational persistence. The data suggests it's much, much closer to a gambling addiction, something driven by hope and the thrill of it, not by logic. And there are some really fascinating patterns in our behavior. The data shows that men tend to trade way more frequently than women. Now, this isn't because they're better at it. It's actually linked to higher levels of overconfidence and a higher tolerance for risk, which, believe it or not, actually leads to worse results. Women, on the other hand, tend to trade less, they're more cautious, and on average, they actually get better outcomes. You see, these schemes are masters at exploiting very specific psychological traps. They target people who are financially desperate because for them, even a tiny 1% chance of success feels like a lifeline. They use what's called survivorship bias against us. We only ever see the flashy Instagram posts from the one person who made it, not the 99 others who went broke. And of course, they play on our own overconfidence. That little voice on our head that says, yeah, sure, other people fail, but I'm different. I can outsmart the system. And this all leads to our next point. Because the damage from these schemes, it goes so much deeper than just your bank account. The true cost is measured in lost time, in broken relationships, and in shattered dreams. This slide really puts the opportunity cost into sharp focus. Just think about 5 years. If you spend those 5 years chasing a scheme, you've lost money, you've lost 5 years of career growth, and you lost 5 years of potential compound interest on your investments. But if you'd spent those same 5 years building a real, valuable skill or just investing wisely, you would have gained income, you'd be further ahead in your career, and your investments would be growing. That lost time, you can never, ever get that back. And the personal cost, it can be absolutely catastrophic. This quote from an FTC report is just a stark reminder. These schemes, especially the MLMs that push you to sell to your friends and family, they destroy relationships. They force you to turn friendships into transactions, and it can lead to total personal and financial ruin. Okay, so we've seen the ugly math and the psychology behind the trap. Now for the good news, the antidote. And I'll be honest, it's not a secret, it's not glamorous, and frankly, it's a little boring. But unlike the schemes, it actually works. The difference is really night and day. Get-rich-quick schemes are all about value extraction, just taking money out of the system from other people. Real wealth building is about value creation, building a skill, starting a business, investing in companies that actually make things. Schemes focus on recruiting and speculating. Real wealth focuses on skills and the magic of compounding. One promises fast and easy, the other is in reality slow and deliberate. So how do you protect yourself? Look, here are the big red flags to watch for. If they promise you huge returns really fast, it's a lie. If making money depends more on you signing up other people than actually selling a product, it's a pyramid scheme. If they talk more about mindset and believing in yourself than actual teachable skills, run. And finally, if they're super vague about how much money people really earn, it's because the numbers are terrible and they don't want you to know. So in the end, it really all boils down to this one question. Chasing a get-rich-quick scheme is just buying a lottery ticket, but with way more steps and much, much worse odds. Building real wealth, on the other hand, is a conscious choice. It's a choice to create value, to invest in yourself, and to let time and compounding do all the heavy lifting for you. And the choice, once you really see the truth, is all yours.